I think if you look at some of the markets that trade around the various outcomes, you'll see that they are below what the polls would otherwise have you believe. So if you look at the 538 poll, you're looking at somewhere in the high 80s for the House to flip. But if you look at some of the betting markets, they're going to be a little bit lower than that, upwards of 20 percentage points lower than that. So I think when we talk to investors about the outcome of the election, we find a lot of skeptics when we talk about the polls. Again, 2016, I think, rings pretty important in the minds of investors. And so I think we'll just have to wait and see how it turns out.
So what are you telling your clients if we can't trust the polls?
Well, it's not that we can't trust the polls, Sarah. It's more that you have to be nimble and you have to be ready to react to whatever the outcome is. So when it comes to interest rate markets, which is where I spend most of my time and energy, we definitely think that an outcome that is in line with the polls is probably going to be a little bit bullish for the Treasury market. Again, nothing dramatic, because you also have to remember that we have the FOMC meeting that's coming on the heels of this election, and we also have a very important meeting between President Donald Trump and President Xi Jinping of China at the end of this month that investors are also going to be very focused on. So we have to be nimble, we have to be ready for surprises. But that's kind of how we're seeing it.
So Matthew, that's if we do see Republican Senate and Democratic House, which you put at 60% chance. If both houses are Republican, you're at 23% chance of that, which is a bit higher than consensus. What does that mean for rates and the US dollar?
So I think if the Republicans maintain control of both houses, what you're going to see is an investor focus on tax reform 2.0. You'll see a focus on possibly an infrastructure plan, deficit financed. Basically, you'll see a focus on higher deficits over the next couple of years than investors currently expect. And you have to remember that investors are expecting much higher deficits as we move forward. So that would actually be a bearish impetus for the U.S. Treasury market. And that's going to percolate throughout other fixed income markets as well. That should be relatively bullish for the dollar, bearish for EM fixed income, and also we think probably not so great for corporate credit, as all of a sudden the focus then turns to the Federal Reserve. How does the Fed respond to an environment where deficits are going to grow even more, and that boost to growth, that fiscal impulse, is even stronger than what investors had previously expected? So I think that will be the focus if the Republicans maintain control of the House.
It's so crazy that the trade out of a Republican victory would be the deficit busting trade. I mean, it's so different than how it used to be. Just curious, Matthew, because the first place we're going to all be looking is the US dollar. It trades 24/7. If the dollar reacts positively, what's the implication, you think, for the stock market, or negatively? What would that mean? What is the correlation like these days?
Well, look, our chief U.S. equity strategist, Mike Wilson, when you look at his scenarios for how this election could turn out, he actually takes more of a neutral stance with respect to almost any outcome. And so, if you look at his year-end target, 2750, which, by the way, his year-end target has been 2750 for the entire year. I don't think it's going to take much it'll actually take quite a lot, I think, to sway him off of that year-end target. So from his perspective, even if you take into consideration some of the near-term correlations, the trade for the equity market seems pretty much sideways in his view. He does think that the worst of the sell-off is behind us. But again, when you look at his scenario analysis for the elections, it's pretty neutral when all's said and done.